Welcome, curious minds, to another deep dive. Today, we're looking at something, well, pretty unprecedented, something shaking up traditional finance.
Oh, yeah. What's that?
Imagine a company where its entire market value is basically riding on this massive, aggressive bet on one digital asset.
Okay, that sounds dramatic. Genius or madness, right?
Exactly. It's a huge shift happening right now, a company totally redefining itself.
It's definitely more than just a shift. I mean, it's companies completely rethinking what a corporate treasury can even be, driven by speculation, sure, but also a long-term digital asset vision.
Absolutely. So today, we're diving deep into Ethereum, the tech behind it all, and this really fascinating company, BitMine Immersion. They're making these massive waves, building what's becoming the world's largest corporate stash of Ether. You're joining us for everything you need to know about finance. And just a quick heads up, this is all about digging into the information, getting you informed. It's not financial advice, okay? Just exploring these big changes.
Right, understanding the landscape.
Yeah. And hey, if you find this kind of thing interesting, please do like and subscribe. It helps you stay informed on these shifts.
Definitely.
So this company, BitMine Immersion, ticker BMNR, it's been on an absolutely wild ride. Just for context, the stock went from, get this, a low of $1.93 to a high of $161 in its 52-week range.
Wow, that's volatile.
Right. As we're talking, it's around $61, $62. But still, that's a dramatic journey. Really hints at the incredible forces involved here.
That kind of extreme swing, that rapid went up, it screams speculative momentum. Intense investor interest in this new model shows how much sentiment is tied to their unique strategy.
So to really get our heads around BitMine's huge bet, we first need to understand the thing they're betting on, Ethereum. So let's start there. What is Ethereum, really?
Okay, so at its heart, Ethereum is decentralized. It's an open source blockchain platform. Think of it like a global computer anyone can access.
Okay.
It lets you build and run applications that are transparent, tamper-proof. The key thing, smart contracts.
Right, smart contracts. I hear that term a lot.
They're basically self-executing programs, like a digital vending machine. You meet the conditions in the code, the agreement executes automatically, no need for banks, lawyers, that sort of thing.
So it's way more than just crypto like Bitcoin. It's a whole programmable layer, a foundation for maybe a new kind of internet.
Exactly. And ETH, that's the native crypto, is the fuel.
The second biggest after Bitcoin, right?
Yep, second largest by market cap. And it's absolutely fundamental. It pays the validators who secure the network. And crucially, it's the only currency for transaction fees on Ethereum.
And some of those fees get burned. What's that about?
Yeah, that's fascinating. A portion of the transaction fees paid in Ether are permanently removed from circulation, burned, deleted.
So like a company buying back its own stock, it just poof.
Kind of, yeah. It increases scarcity over time, makes ETH potentially more valuable for holders, especially if network use is high. It can even make the supply deflationary sometimes.
Interesting. A built-in scarcity mechanism. And Ethereum's gone through some major upgrades, hasn't it? The merge was the big one.
Oh, the merge in September 2022 was pivotal, absolutely huge. They switched from proof of work, think massive energy consumption for mining, to proof of stake.
Much more efficient.
Massively. Cut energy use by over 99%. Address those big environmental worries and, set the stage for scaling up. It was a serious engineering challenge. Many people doubted they could pull it off.
And the upgrades didn't stop there. What's happened recently and what's next?
Yeah.
How does that affect users?
Right. It's constantly evolving, always trying to improve speed, cost, user experience. So in March 2024, we got the Denkin upgrade, introduced something called blobs.
Blobs sounds weird.
Ha! Yeah, the name's a bit abstract, but think of layer 2 networks as express lanes built on top of Ethereum's main highway to handle traffic. Blobs are like this super efficient new way to ship data packages on those express lanes.
Okay, so making those layer 2s cheaper and faster.
Exactly. Drastically cheaper for you to use those scaling solutions. And looking ahead, probably mid-2025, we expect the Pectra upgrade. That should bring more cool stuff.
Like what?
Things like letting validators stake more ETH up to 2048 per validator, and giving user accounts more flexibility, almost like smart contracts themselves, opens up new ways to manage your assets.
Sounds like it's constantly being refined, built for the long haul. What about its legal status? Especially in the U.S., that's always a big question for institutions.
Yeah, that's critical. Look, in the U.S., regulators like the CFTC, the Commodity Futures Trading Commission, they've pretty consistently signaled that Ether should be seen as a commodity.
Not a security. Why does that matter so much?
It matters hugely. If it were a security, it'd fall under the SEC, face much stricter rules. That could make it way harder for traditional finance, companies like BitMine, to legally buy and hold it. Being a commodity gives it a clearer path.
Okay, got it.
Plus, under the Uniform Commercial Code, the UCC, it's now recognized legally as intangible personal property, a specific type called a controllable electronic record. That provides a solid legal footing for using it commercially.
So that legal clarity is key for these big players to make massive moves. Which brings us back to BitMine immersion. They weren't always about Ethereum, were they?
Not at all. They started out mining Bitcoin, but then in 2025, they made this incredibly sharp pivot, just boom, changed direction completely.
To accumulating Ethereum.
Aggressively accumulating Ethereum, yeah. And what's really wild is that their market cap now, it's almost entirely based on their ETH holdings. Very little revenue comes from the old mining business anymore. It's a total transformation.
That is audacious. So they're not just dipping a toe in, they're all in. How much ETH are we talking about? The scale must be huge.
The scale is staggering, honestly hard to wrap your head around. As of August 10th, 2025, they held over 1.15 million Ether.
1.15 million.
Valued at over $4.96 billion.
Billion, okay.
That makes BitMine the world's largest corporate ETH treasury. And globally, considering all crypto treasuries, they're number 3, only behind MicroStrategy's Bitcoin pile and Mara Blockchain's Bitcoin.
Wow. That's quite the company to keep. And the speed they accumulated this, that's also pretty nuts, isn't it?
Lightning speed.
Yeah.
In just 1 week, they added $2 billion worth of ETH to their holdings.
$2 billion in a week.
Yeah. It shows how committed they are to this goal they call the alchemy of 5%, their stated aim. Acquire 5% of the total global ETH supply.
5% of all Ether. That's ambitious, doesn't even cover it.
It's monumental. They're basically positioning themselves almost like a private central bank for Ether, in a way. And to fund this, they plan to raise up to $20 billion more by selling stock.
$20 billion more.
Okay.
And they've actually managed to attract some big-name backers for this, premier investors.
They have. Despite the risks, they've got serious players on board. Names like ARK's Cathie Wood, Peter Thiel's Founders Fund, which took a big 9.1% stake, Bill Miller III, Pantera.
Heavy hitters. Their backing definitely signals some major institutional confidence in this ETH strategy.
Absolutely. And all this activity, this huge bet, it's had a massive impact on their stocks market presence, too.
How so?
Well, BMNR is now one of the most traded stocks in the U.S. It's shot up the liquidity rankings, 25th most liquid U.S. stock now, trading about $2.2 billion daily.
Daily. Wow. More than some huge established names.
Yeah, trading more dollar volume than JP Morgan or Micron Technology based on recent data. That means big funds can get in and out easily, fuels the momentum, but also means, rapid price swings are possible, high risk, high potential reward.
Okay, so we have BitMine, this corporate entity, making a massive active bet, buying up Ether hand over fist. But for a regular investor, maybe someone less comfortable with that direct corporate risk, there's another way to get ETH exposure right, the ETF.
That's right. Back in June 2024, BlackRock launched the iShares Ethereum Trust ETF, ticker's ETHA.
ETHA, okay.
And it gives investors exposure to Ether's price movements, but through a normal brokerage account. You don't have to worry about wallets or keys yourself.
So it's like buying a stock, but it tracks Ether's price. More familiar, maybe less intimidating for some. How does it work?
Exactly. It's physically backed, meaning the ETF actually holds Ether. Coinbase Prime handles the custody, which adds a layer of security and trust.
Makes sense.
Its main goal is just to track the price of Ether minus expenses. So, yeah, simplicity is key. Easier tax reporting compared to holding ETH directly, too. It's about convenience and outsourcing the tech hassle.
Sounds straightforward. But, and this seems crucial, there's a big difference between just holding Ether shares and what BitMine is doing with its massive ETH pile, isn't there?
A fundamental difference, yeah. This is where the investment ideas really diverge. ETHA, the ETF, it doesn't participate in Ethereum staking.
Meaning holders don't get staking rewards.
Correct. If you hold ETH directly and stake it, you earn rewards for helping secure the network. ETHA holders miss out on that potential income stream. It's purely about price exposure.
Whereas BitMine, with all that Ether, they could potentially stake it and earn rewards, adding another layer of value, even if their main game is accumulation right now.
Potentially, yes. Although their stated strategy is hyper-focused on accumulation. But the option is there in a way it isn't for ETHA holders.
So BitMine is active accumulation, strategic positioning, maybe future staking. ETHA is passive price tracking. Does this show up in how they trade, Do they move together?
You'd think so, right? BMNR holds ETH, ETH attracts ETH. But here's what's fascinating. The correlation between BMNR stock and the ETHA ETF is actually really low, like 0.08 as of early August 2025.
0.08. That's practically uncorrelated. Why?
It highlights the difference. BMNR is driven by its corporate strategy, the massive accumulation bet, investor sentiment about that specific company, and its potential to become this ether whale. There's huge speculative momentum there.
Right.
ETHA is just passively tracking the ether price. Much less drama, maybe. So ETHA is for straightforward, hands-off price exposure via your broker. Convenient.
But BMNR?
BMNR is a bet on that aggressive corporate strategy itself. A bet on a company transforming its value by hoarding a digital asset. A much higher risk, much higher potential volatility, catering to a totally different investor.
Right. One's a corporate play on the asset, the other's just tracking the asset. Okay. So zooming out again, what's the bigger picture for Ethereum itself? Sentiment seems pretty positive right now.
Yeah, definitely bullish sentiment around Ether lately. The price has been creeping back up towards those 2021 highs. You've got big banks like Standard Chartered putting out forecasts suggesting ETH could hit $7,500 by year end.
What's driving that optimism?
Continued network development, definitely. Growing use in DeFi, NFTs, DAOs, and just increasing institutional interest, partly fueled by things like the ETFs and strategies like Bitmines.
But what about scalability? That's always been the elephant in the room for Ethereum, hasn't it, compared to, say, Visa?
It's still the crucial challenge, absolutely. I mean, updates like Denkin with the blobs help layer 2s become much more efficient, but Ethereum's main layer throughput still way below traditional systems like Visa.
Visa does, what, tens of thousands of transactions per second?
Something like that, yeah. Ethereum's base layer is nowhere near that, though it's improving, and layer 2s help massively. But scaling the base layer while keeping it decentralized, that's the ongoing balancing act for the developers. A huge focus.
So the tech's improving, sentiment's up, and companies like Bitmine are pioneering these wild strategies. Is this crypto treasury thing a bigger trend we're seeing?
I think it is, and this is where it gets really interesting for the future of corporate finance, potentially. Bitmine is maybe the most extreme example with ETH, but it points to this broader trend.
Companies holding crypto not just as a small investment, but as a core part of their treasury.
Exactly. Rethinking the whole balance sheet. Instead of just relying on operational profits and holding cash or bonds, they're actively betting on the long-term appreciation of digital assets. MicroStrategy did it with Bitcoin, now Bitmine with Ethereum.
Turning the company itself into almost an asset-backed fund.
Kind of, yeah. It's bold, but it also brings huge questions. What happens when crypto volatility hits the corporate balance sheet directly? Massive risk, but also potentially massive reward if they're right about the long-term value.
Wow. Okay, so we've gone from Ethereum's nuts and bolts, the merge, blobs, all the way to Bitmine's multi-billion-dollar Ether bet and this emerging crypto treasury model. The wild intersection of tech, finance, speculation.
It really shows how fast things are changing, new ways of thinking about value, corporate strategy. It's happening right now.
So here's the final thought to chew on. You've got Bitmine aiming for 5% of all Ether. You've got Ethereum constantly upgrading its tech, getting clearer legal standing. What does this combination tell us about corporate assets and investing down the road?
Right.
Are we seeing the start of a totally new era for corporate treasuries where companies basically become huge digital asset funds?
Yeah.
Or is this just a massive speculative bubble fueled by momentum waiting to pop?
That is the billion-dollar question, isn't it? Maybe even the trillion-dollar question for the next decade. We'll definitely be watching.
A lot to think about. Thanks for joining us on this deep dive today. Keep exploring these topics, and we'll catch you next time.